Good morning, guys. So this is the putting it all together. This is the combination that I talked about: Bookmap and Ninja Trader, two charts side by side. Now I do apologize because it might look a little bit crowded. Granted, I use two screens for trading, so usually it doesn't really matter. But now when we cram it into a one small screen, this SVP, so the session volume profile and the current volume profile, these might be a little bit redundant because you also have a volume profile right here on Ninja Trader. For now, I'm just gonna leave it like it is. One more thing that I've done is I've removed all the additional paid add-ons from Bookmap because I had a little bit of an issue with the fact that people were asking me how much does this one cost, does this one cost. So here's a disclaimer: I do have lifetime subscriptions to Bookmap highest tier. I don't know what they call it, and I also have a lifetime subscription to Ninja Trader. The only thing that you need to pay extra when you have those is the monthly data feed. I believe for Ninja Trader I pay $8, and for Bookmap I believe it's $36 for the Bookmap data. As you can see right here, it's BMD. I don't use rhythmic data. I found it to be inferior to BMD. Bookmap data is still market by order data, so all the MBO plugins like stops and icebergs and market pools and TraderMap Pro will work with Bookmap data as well. But for this exercise, I have switched them off, so you don't need to pay anything extra than the data and the actual Bookmap subscription. For Ninja Trader, as I said, I have a lifetime subscription. I only pay for the data. There's no paid add-ons whatsoever. So this is what it is. Where we are starting, we're taking off from yesterday, 4 o'clock my time. That's 30 minutes before the market opens. So let's check and see what actually happened. So I'm just gonna move it like this, 10 minutes, and then I'm gonna play Bookmap for 10 minutes. So you see we're going up right here. This is the VWAP. Let me just squeeze that a little bit. So this is the VWAP. And look what happens with Bookmap. So I'm just gonna play it until 4:10, so 20 minutes before the market opens. Okay, so we stop it. Now we see the VWAP right here. You're going into the VWAP. There are a few things I want to point out. Now, the first thing that is important is to note the volume profile. So look, if I go back, the volume profile is right here. Just look at the POC, the point of control, how it moves up when we go up there. You see, there's a one frame thing, so it's a minute thing. And the point of control is switched back here. So that's a sign that they are adding liquidity here. What happens when you add liquidity? Usually that signifies some resistance in this case, or support when we're going down. So we have the VWAP, we have this. However, Bookmap's not giving you anything right now. So if you decide to trade this, most probably what I would do, I wouldn't trade that, especially looking at the wicks, but what you can do is hide your stop above the VWAP. That's the only reasonable thing that I can tell you. I am not going to take this trade. That's not something that I would like to take. So let's have another 10 minutes here. And you can see we're back and forth, back and forth, back and forth. Let's see if Bookmap will give you some more reason. The point of control is still staying here. So let's see if Bookmap will give you a reason. And we're gonna run it all the way until 20. So there's really nothing here going on. See, they're supporting the price. So good thing, you wait. They're supporting the price. They're adding it higher. So probably somebody went long right here. This is the stop, they added here. This is getting a little bit more prominent. So you see it's getting, what is the word? It's getting a little bit more prominent, or let's just put it this way. So going 25. Hold on a second. Let me show you that. I don't know if you caught it. Now look, when we start going down, look at the color change right here. Did you see it? Flashing yellows and reds. That means that they entered short and this is their stop. Let's see how it goes. You saw the red flashing here. Again, they added liquidity here, so they lowered their stop right here. What happened here? Let's just, catch up, moving about 5-10 points. So right now you see some dodges appearing where that's happening. So you see some dodges appear right here, a huge bar down, and you now have that happened 24 right around here. So that's the huge drops right here. At that time we were seeing the flashing of the reds and the yellows. Now here's a disclaimer. That's 5 minutes before the market opens. Do you really want to trade it? I don't know. Would I take it? Probably. Seeing the flashing here, seeing this bar here, seeing the point of control being here, the volume weighted average price up here is resistance, and then one more thing, the cumulative volume delta. Look what's going on with the cumulative volume delta. We're making a high here, like compared to this, right? We're making a high here, volume delta is going lower. We're still making highs, volume delta is going lower. That just tells you that there is pressure to the downside. So would I take this? Yes. The way I would take it, and this is what the SPAS entry tool stands here for. I do have an entry tool that was programmed by another guy that will actually, in the development of the candle, I have some buttons here and I can press place short. So the moment this candle ends, right, that's why I have the timer. The moment this candle ends, I will place a short one tick below the low with stop one tick above the high. So it will automatically place the order. And because I cannot do it, I cannot be as fast as the software. So when this ends, it automatically places the order, whereas sometimes I won't be fast enough to enter the trade, and this candle would just start going down or going up and whatever. So I just have a tool. It was done by another guy. If you are interested in his coding skills, I can send you the link and to tell you who it is in the description, whatever. Just write a comment and I'll do that. No worries. So this is going down. Now, I want to tell you, the first zone that I'm looking for when this is going down is right here. This is the 2 standard deviation support zone, and then this is the run number, the 50s. Now, let's see what's going on. And mind you, we're almost at open, so 5 more minutes until the open. So when we get to 28, 29, a minute before the open, I'll probably scratch this trade. If I am in it, I'll take it out. So let's see what Bookmap shows us. We're going down, they're adding more here. Here's might be some sort of support. And then this is the market open. So let's see what happens when the market opens. Here is where the market opens. Now, this is the 1 standard deviation. They're still not moving the point of control. So far so good. Let's see another 10 minutes of Bookmap. It's going back and forth, back and forth. You probably should be out of this trade when the market opens, right around here or even here. It's a good, it's a good 2-to-1 risk reward that you could have taken. So we're going back, we're going forward up until 40. Let's see how this one goes. There's a huge candle. If that's not good enough to scare you, they moved the point of control down here. So you should be out no matter what when you see that happening, right? You see how, and then you have it. So they actually moved it when this started. You should be out. So we go until 40, right? So we have 40. And there's absolutely nothing here. You have the point of control. But the next liquidity on Bookmap is down here. And that's 10 points. It's not paying you to be there. So no trade right now. You're just waiting. There is some absorption going on. Just keep waiting. I'll forward it to about 10 minutes into the first, into 5 o'clock. So there's a sweep and we're going down. Okay, so look what happens. We went through this liquidity right here. They, got some of this liquidity, went up. There is absorption. We're going down, but look at this. They are building liquidity. We have this very dark red zone right here. So they're building liquidity. Let's see what happens right here. So we go back to the 50. And that's the first take on liquidity right here. This little thing going back up. That's the thing that you're looking for. Now, as I said, I trade when the candle enters. That's a good enough reason for me having this liquidity, having these two zones like the round number, and then we having a 2 standard deviation, touch. That's a good enough reason for me to enter a long. So I'll have my software. It will place a buy stop if we take out the high. Obviously, we don't do it with this candle, and I usually hold it only one candle. So if this candle doesn't take it out, the trade is canceled. So let's see what happens here. You see, liquidity is still here. They're not moving. So I'll just stop it here at the 5. Liquidity is still here. They didn't move it. Let's see what candles we got. Okay, so you have another one that is bullish candle into the zone. And you can obviously use this one and this one, but these are red candles, down candles. Probably you're not going to be okay trying to trade, a bullish trade in with a down candle. So using this candle right here, making a lower low according to this chart, not really according to this chart, but it's pretty much the same. Making a lower low into the zone again, bullish candle, good wick on the downside. Look at the volume delta. You definitely have some divergence here. You can also see it right here. You have divergence. This closes, you take a long. Your stop below the low, one tick above the high is your entry point. And what do you see right here? Where should be your target? The first thing that you see here is the VWAP, right? The VWAP, as I told you, is the most important thing with my zones. These are the two things that I look for as targets. So you have the VWAP, you have this, you should probably be out by now. But the moment that you get close to the VWAP, at least backstop it, like use your stop loss. So let's see another 10 minutes of Bookmap. So we go in the first 30 minutes of trading is right here. I'll continue for 5 more minutes. They're building some zone right here. So let's go back. So now we have our touch right here on the VWAP. Let's say you are in, you're taking it out or whatever, going back to 10 o'clock, to 10 minutes after 5. So you see there is back and forth, back and forth, back and forth. There is some some idea, but this never got to the VWAP. Now, if you want to take a trade right here, I wouldn't blame you. But again, you have to be mindful of the risk that you're taking. You do have some liquidity right here building up, but the VWAP is higher. So the VWAP right here is 65. It's right above here, 66 even. So something like that. You have this liquidity right here. I'm not taking this trade. It's not for me. If this wick went into the VWAP and rejected, that's another story. But looking at this like this, no, probably no trade for me. So we're going back. We have this liquidity and this liquidity right here. Remember, we need to enter a zone in order to use Bookmap as confirmation. So I'm just looking. We're not going to be trading solely out of Bookmap. We're going to go all the way until 5:30. With Bookmap, see they're building another zone right here. So this is becoming more prominent. Now this is resistance, obviously. We broke through it. Let's see. So this remains here. This zone remains here for now. They took this one out. So we're going until 5:30. Let's see what happens. All right, so you have the VWAP right here. That was 22. That is right here. So at 22, you have the VWAP. So if you take a trade from the VWAP, we're going back to 30. All right, so we're going 30. Where is 30? It's right here. So if you take a trade like this, obviously off of the VWAP, these weeks are good enough. You don't have anything above this. So where would you place your stop? Now, you can obviously place it a few ticks above the VWAP, but there's no liquidity right here. You don't have anything to go off by. You're only using the VWAP. Is that good enough? I wouldn't say so. I wouldn't just use the VWAP. I want some liquidity. So I'm not saying taking a trade here is wrong. Well, it's fine, take it. But if you take after, like I do, if you take it after the candle is formed, so let's say I take it off of this candle, or even if this candle, it doesn't really matter, it's 62. What I see on Bookmap is this liquidity right here at 70. So I have 8 points of risk. So I have to have my stop all the way right here, right? And maybe a tick above this liquidity. So all the way 70.25. Right, and that's a lot of risk. That's almost the same as going to this zone. So would you take it? I wouldn't. I'm just telling you how I think, how I look at the trade. So this is my rationale behind trading. So let's take another 30 minutes here. Or if something important happens, we touch an important zone, I'll stop it, obviously. Okay, so we have some absorption here. We have sweep. We're going back up. That's the zone right here that we identified here at 70. We're at 40. Let's just stay with it. They're building into the zone, so this might actually hold. Another absorption here. Big dot. More absorption coming in. Okay, let's just go and see what's going on. That's 45. So we're going up. We broke this VWAP. 45. Okay. Again, we see the exact same thing that I showed you a little bit in pre-market. Let's just do this. So as we are going up, look at the next frame. Look at the point of control. They switched again. That's very powerful. So here's your support. We move one candle more, so 1 minute, and then the point of control is already here. Now, again, if you want to take a trade right here, just use the same rationale that we used a few minutes before. You have the next zone right here at 75. Now 75 is also a zone for me. So right around here. If you take a trade here, you have to use this as your stop. Would you do it? I wouldn't. I'm not convinced. This is a bit too much for me in terms of risk, because the next support zone is right here, the VWAP. Right, so it doesn't make sense, right? If you look at it, just eyeballing it, there's no need to be, very thorough about that. It's 1-to-1. It doesn't pay you to be in trades like that. Now let's see if we get to 75. If we get to 75, you obviously have a trade. Then also one more thing I want to show you. Look at the VWAP, see how it's starting to bend down. But again, you don't have a trade. We're not into the zone. That's a very good zone right here. You're not into the zone. And the only reason I want to get into a zone is to actually have a favorable risk to reward ratio. All right. Obviously, this went down. We are not into the trade. There's no reason for me to be in a trade like this. Well, of course, you can take it, right? You can take it, any of these red candles right here. You can take it, but then you have to use this for your stop. I'm not saying it's wrong. I'm just saying think about the risk to reward ratio, right? So 6 o'clock is right here. Now, let's just do something here. Look at all the wicks right here around the 1 standard deviation. And I know what I said. I know this is not a tradable opportunity here, the 1 standard deviation. It's not too extreme for me, so to speak. Two standard deviation is extreme. It's good. The 1 standard deviation is not. But look at the wicks. Obviously, there is some support right here. Right? I'm just, pointing out here something. Also, and that's the good thing about having like a wide monitor where you can, really stretch the chart and see a lot of things. Like for example, we see a lot of things if we do that. you see quite a lot of things. So I was saying this is not a tradable situation, but now that you look at it this way, all right, we're right at the high. So if you have a wider chart, you might actually see things that you can't see. Let me just grab it and move it back. So you might actually see things that you can't see when the chart is squeezed. That's why I preferred wide monitors and having those two on different monitors. But anyway, that's beyond the scope of the video. So as I said, look at the wick, large wick, very large wick actually, and we're going right into these lows. Is that a tradable wick? Well, here's my thinking. It's quite a lot of risk, right? So it's 5 points. It's quite a big of a wick. So you might actually try to dip in. I'm not saying it's gonna go up. And I'll tell you, I didn't even trade yesterday during the regular hours because I made what I wanted to make in pre-market. So I don't even know how it's gonna go. I just left Bookmap on recording, and I was only doing from my phone the stocks. So I didn't even trade yesterday in terms of futures in the cash session. So let's rewind another 10 minutes here and see what Bookmap will show us. All right, so we go in here, that's the thing. And as I said, you have this candle forming right here at 801. You have this going here, and you have some liquidity here at 53. 60, 53, 7 points, not sure. Again, why? VWAP is right here. It's again 1-to-1. It's not very favorable, right? So let's go to right around 30. Okay, let's see what Bookmap shows. Again, it went there, but you could have taken a stop right here. So it's 1-to-1, 1-to-1, 1-to-1. Not ideal. And we're looking at 6:30. So I'm going to let Bookmap play all the way until 6:30. This is 2 hours into the market cash session. We have some absorption. And 65 is the VWAP. That's why it's, very tight right here. They're supporting this bit higher. We're going into 70 again. 70 is again a zone right here. So 70 is this one right here. Now, mind you, the point of control just stayed here throughout this. So it's a valid resistance zone. And you have the 70 right around here, this zone with this start. Still being here as resistance. Now, I'm not saying take any trade. I'm just explaining what I see on the chart. But for now, there's absolutely nothing that you can trade. This week, probably tradable 1-to-1 risk-reward ratio, not ideal. All right, so let's see. We're just gonna, let's see when they move that. Okay. $40.50. We're right here. Remember, right now we're looking at this Bookmap. So we're right here on Bookmap. Let's see how this plays out. You don't really have a trade right here, honestly. Nike, look at Bookmap. So they just look at that. Your stop should be 70. Whatever you do, if you're short, your stop is 70. And 62 to 70, that's about 10 points. I wouldn't do it. It's just too much. So right now, you don't have anything here. Now let's watch this part right here. This candle, it's again a very long wick. Again, into the low of this wick. This provided some trading. This might actually prove to be another good trade. So you see right here. Now I'll show you why this is actually different. So we're looking, as I said, until 7 o'clock, right? So we go here, that's about 46. Let's see what Bookmap will show you. Okay, obviously absorption here, you can see volume coming in, that's at 45. Okay, so if you see this candle into a prior low, right? Quite a lot of wicks, 1, 2, 3. This is lower, but 1, 2, 3. And you saw that this one played all the way to the VWAP and a little bit higher, But again, from risk to reward standpoint, that was bad. Then you have a similar candle, but with very small body. And now your risk is defined as only 3 points, right? You still have some liquidity right here. Also, you have liquidity right here, but you have some good liquidity here at 54, 55. So what you can do right here with the risk of about 3 points is actually take this trade again to the VWAP, which in this point right now coincides with the point of control. So this is a good trade. This one, not so much. I wouldn't take this one. This one, I'll be all over that. But the first one, not ideal. Risk to reward ratio, you see you have like about 3 points here, and you have about 7 to 8 points here. So 2 to 1, it's okay. It's not ideal, but it's okay, right? You can take this type of a trade. So we go back to the VWAP. And I want to show you something. Okay, I saw this candle right here. So when the chart is developing right into here, again, low, low. You also have the cumulative volume delta going up. Let's just see if there's liquidity right here at 710. So we're looking. All right, obviously this goes up now to the VWAP. We know that. Let's see how the VWAP will react. 64, 65. Let's see if they're going to add some liquidity right here that will show us if you need to. I see some orange, yellow, red. Yeah, okay, so that's the 66. It's right here. We didn't get there, but 66 that high. All right, it's above the VWAP, so never mind. And now we're looking at 710. Let's see, at 710, or just about there. What will happen when we go down? Okay, and then there's absorption. Yes. Okay. Right. So now a valid question. Do I take this candle? My answer, looking at this, is yeah. Why not? I mean, if you think about it, you have a similar candle. Obviously, it's not ideal with this candle prior to it, pointing you down and then this going up, right? You don't have things like that here. You have one after it. Prior to it, this might raise a little bit of a concern. There's downward pressure, but nevertheless, if you just compare candle for candle, they're almost similar, right? You also have support here in terms of liquidity below that. The cumulative volume delta is higher. Okay, why not? 62, 57, 56. All right, that's 2 points. I'll take that. 2 points of a risk in order to make, 5, 6 points? Sure, why not? Take it. What will happen? You're taken out. It happens. I'm not going to pretend that every single time, you're going to be successful. So we're going to go up until 30. But nevertheless, you have the same candle. Why not? You have liquidity here. Take it. 730. All right, let's go to 730. So obviously that was the break. And there's the next liquidity at 49. There's a lot of liquidity being built here. So we're going to go all the way until 730. We have back and forth, going up, going down, going up, going down. Now again, same situation right here. You see this liquidity being built after we make this. They add liquidity right here, lower low. Same thing, low, low. Now here's the other thing. You have this candle, 55, 52. That's about 3 points. I do have a zone a bit lower. So this would be, should I take it, should I not? I am not sure I'm going to take that. Honestly, if I saw this touching down into the zone, into the 2 standard deviation with some liquidity below that, sure. My liquidity right now is at 50. This is 55. I'll probably have to widen my stop all the way below this liquidity in order to feel secure in my trade. So this trade I'll probably pass on. Even though I like the candle, I like that we're testing this high, this low, I'm sorry, I'll probably pass on this trade. The way that I look at it right now, I'll probably pass on it. And, I would have been wrong. But nevertheless, I don't have enough of a risk reward in my mind because I don't know what happens here, right? In my mind, I don't have enough risk reward, to trade it. Should you trade it? You could, but you've also could have taken all the other trades that were 1-to-1 and could have made a buck. But on another day, you could have lost. So let's go 740, going 740. You do have this liquidity. Nevertheless, you do have this liquidity. So if you're going to place a stop, place it below the liquidity. So we're going 740. Now, right here, it's a VWAP. That's a possible short, the way that I see it right now. Let's see if Bookmap will give you something to short here on this VWAP. 740. All right, you have liquidity right here. It's almost 740. So you have liquidity right here. That looks fine to me. I'm taking, you see, the cumulative volume delta is lower. We're making a higher high. Cumulative volume delta is lower. That liquidity fine. This candle right here looks good to me in order to short below the low. So right here you can short below the low. Stops above the high. In this case, that will be above this liquidity. Looks fine to me. And you're stopped. That's it. You're just stopped. We're playing around with the VWAP. That looked fine to me. You're filled. You're stopped on the next goal. That's fine. We go until 8 o'clock. Let's go 8 o'clock. Okay, nothing to do here. Again, very important. Look what happens with the point of control. Boom, they moved it here. Do we have a zone? We don't. There's nothing that we can do right here. 8:15. Let's go with Bookmap, see where we take us. Again, this 70 zone. Look at the volume right here. Look at the line. And I'll stop it here at 15. And I want to squeeze the chart for just a second, just to see something. We're higher. So no man's land whatsoever. Yes. All right. Let's do another 15 minutes. Do here. So I'll show you something here. So we're going back to the VWAP. We're bouncing off of the VWAP. We're going back up. Looking at Bookmap right now, there's liquidity being built right here. So if you are into taking a short right here, you can use that liquidity as your stop. Again, chart-wise, nowhere near anything. So this is the only thing that you can go off of right now. I'm not going to take it. I'm going to be honest with you. I'm not going to take a trade just because Bookmap shows some liquidity right here. And my chart is absolutely nowhere. So we were in the middle of anything. It doesn't make any sense to me to take a trade. Now, the way that you see Bookmap right now, there's absolutely nothing that, stops this price from falling. But we have the VWAP. So even if you take this, right, I don't know, you take it somewhere around here, you have another 5 points to the liquidity at 70. So you're taking all right, it's 67. All right, 3 points until liquidity. You have the PLC right here, 64. You have 63. You have the vwap. This is going up. It's a mess. The chart is a mess. Don't trade messy charts. Trade charts that actually say something to you, right? So let's go until we have 8:30. So let's go until 8:30 right here. There's a lot of overhead supply here on this chart. So it's just a mess, right? If the chart is not clear to you the moment that you see it, there's absolutely no need to trade that. I mean, it doesn't make any sense to me. Right, so let's go some more time. Go 45 here. VWAP at 63, right around here. All right, so we have some volume going on here. And now we have some back and forth, back and forth, back and forth. We're going all the way until 50, again, 40, 45. Now see how this liquidity here stuck at 63? That's somewhere around our VWAP. I want to show you something. Okay, just a second here. So right around at 40, you can see that they're starting to add liquidity right here. Just watch that. You see they're flashing and they lower that. So this happens, what is it, 40. I'm just looking at this candle right here. Look at this candle. Touches and goes down. Touches and goes down. Let's watch it. Touched it. Did you see there was some dark liquidity right here? Then we have this. You see how light this is going into orange? Right, you obviously have some support here as well. Look, yellow, orange, adding here. So, and now you see this candle being formed. Would you take it? And I'll tell you right away. My zone is right here. My VWAP is right here. So that's my protection right here. My VWAP is my protection. This liquidity right here, 64, good enough. What do you have here? 61, 64, 3 points and a half, 4 points at the max. Your zone is right here, 51. So you have 61, 51. That's 10 points to 4 points. Would you take it? Yes, it makes sense. Would it be successful? And I'll tell you the truth. I peeked into the chart right now. When we do that, I saw it. It's going down. But my point is not that. My point is that it makes logical sense to take this trade. Did it get 51? I don't know. Let's see if it will go there. Right now we're at 9 o'clock. That's 2 hours before the market closes. I'll play with Bookmap until 9 o'clock. And I'll show you something that worries me right now is this liquidity right here just staying. All right, we took it out. Okay, good. There's some absorption, but they started adding here. So let's just keep it going until 9 o'clock. See how it is. Okay, there's more liquidity right here that's actually doing support for us, meaning that it's resistance. We didn't get there yet. Again, they added. So I'm not gonna lie to you. Being short here, seeing this candle right here being formed on the one standard deviation, although I don't use it, it's a little bit scary. So you probably want to tighten up your trade or even take partials, whatever. Depends on the amount of contract that you're trading. If you're trading one contract, you better off taking just profits. If you're taking, I don't know, 2 or whatever number of contracts you're trading, you can just take one out, you know, get some profits in there, getting into the flow, and then the other ones you can just backstab them or whatever. Anyway, let's see another 15 minutes of trading. 9:15. So you see that almost went into the VWAP, but still, going back and forth, basically doing absolutely nothing. Let's see what Bookmap's showing us. We're going 9:15 here. See, they're adding some liquidity right here, so this might actually bust. Looking at Bookmap, 9:15, and I'll go to 9:30 on Bookmap, and then I'll forward this chart as well. So let's just look at Bookmap. So this is just very tight action. See, they're supporting this. They removed that. All right, 915 going down. 50 is still a zone for us right here. Oh, okay. Now look, let me just move this just a little. Look at, and I'll try to catch that. Do you see all the bots being gone? Like they just left some important zones, but all the bots are gone. That means usually Bookmap is very good at this. It will tell you there is something going on, like an announcement or something like this. So this moment right here, you might want to be out, right? So let's go to 9:30 and see. See, there's absolutely nothing here. Look at this and then look at this. It's void. It's nothing. So there's some economic news. Something's going on. So you see they're supporting here at 43, 40, what is that, 44, massive. Look at this volume right here, massive. So that's 25. Let's go to 25. I have to do this. So 25 is right here. That's the 3 standard deviations. Is it? It's not. That's 21. So we're right here. So 3 standard deviations bounce of it. I wouldn't, touch that with a 10 pull fall. It just doesn't do any good. Right. So I'm going to 940 here. 3 standard deviations. That line right here is 3 standard deviations. Now, one thing that you can think of is, all right, we go back, we go into the zone right here, and we reject with this candle. 45, 51, no, too much, 6-7 points. This liquidity and this, lack of bots and lack of liquidity here, I wouldn't be comfortable trading that. So now 35 is our zone of support. It is sort of holding. They're adding some here. Again, I'm just looking for signs that something here might actually be tradable. Wait, okay. I'm just looking at the evolution of the PLC right now. Yeah, didn't look so. There was nothing really that you could trade. You could think about these trades right here, but remember, we are at the 2 standard deviation. We are above below actually the 2 standard deviations of the vwap. That means that 95% of the trades are in this zone right here, and only 5 are below here. I mean, you have to have like a 20-to-1 risk reward in order to break even with the statistics only. It doesn't make any sense. Yes, you do have some support being built right here in this zone. But again, there's nothing here. We're gonna stop. Like, remember, right here, my next zone is at 25. It's all the way right here. So, where are you gonna place your stop? You have the point of control here. Obviously, yes, okay. You take profits right here into this zone, into this large candle right here that actually proved to be, the rejection what we got there. And even further, you have this right here, this large candle, that's another further resistance zone right here. So even if you take it long here, you have to place a stop right here. Probably you could place your stop right here again, but if you think about it, that's 41, that is 36, whatever, that's 5 points. You don't even have 5 points up here, so it doesn't make any sense. Now, if you get into this type of a zone right here, 25, then yeah, we can talk about trading. So let's go. And there we go. Okay, let's see. Let's see if these candles right here, 26, was it 26? We'll actually have some support on Bookmap. You can see it. No, you need a little bit more down. Okay, so you can see there is some volume right here, 25. Okay, right. We moved here, 29. You have this. That's 31. That's 26. That's 24. Again, 6 points. Where would you place your take profit, stop. Right around here, the flip. I mean, that's the first thing that you can think, the flip. Then the second thing is two standard deviations. Usually, as I said, that's support. When we go down, when we go from it, that usually happens when we have a trending market to the downside. And again, if we're using this side right here, trending market to the upside, so that can actually act as resistance. So you have 31, you have 26, that's 5 points. You have this coming at 27, 1-to-1. Would you take it? I'm not saying don't. I'm just saying that, the risk reward is not favorable. One thing that actually guides you to taking this type of a trade is looking at the cumulative volume delta. You see it's going up, and this is, going down. Right. So you see, this was right here. Then we have this, and then we have this, which is actually higher than this, going here. So you could have taken this trade. Yeah, that's. I'm not saying it's a reasonable trade. It's 1-to-1, not my favorite, but at least you have enough conditions stacked in your favor in order to take a trade like this. So we're going up. Obviously, this one was good. Went through it. Here you have another zone of resistance. When we talked about it, here's another zone of resistance. These large candles going down, there's sort of resistance. We're going up into the zone, and if you haven't taken any profits up until now, here's the moment that you have to take it. Let's stay at 22:30. Let's play Bookmap for half an hour now. We can actually speed that up a little bit at 64. Okay, we're going up. Remember, 50 is a zone for me. Maybe some people don't use round numbers. I use them. So we have 15. It's building. There's really nothing that sticks out. All right, let's slow it down a little bit now. Here you have some resistance with absorption. So that might tell you, all right, time for me to take some profits. That's probably around right here. And then we moved higher as well. And as I said, 50. So that's 30. Let's do another. All right, so as you can see right here, they moved the point of control into the zone. Take profits. If you're long right here, take profits. That's about what would you make? That's about 20 points. You couldn't ask for more. 20 points with 5 points of raise. That's 4-to-1. Perfect. Just take profits. Now we're going into the end of the trading hours. 10 minutes. You don't trade then. Even if you see that on the vwap, no trading that close to the end. That's a little bit better, but still, that's outside of market hours. You don't trade that. And I'm not saying you don't trade it, but there's 1 hour after the market is closed and before the Asian market opens. So that's like when crazy things happen. So you really don't trade. After the US cash session, before the Asian open, you just don't trade. Just stay away. Right now, there's absolutely nothing that happened. Probably, nothing crazy here, but sometimes you will see very, very, very interesting things happening. Then again, 55 is liquidity here. It's vwap. It's 57. So that is your liquidity right here. Too. Looking at that, 39 just sticks here. So 39. And we are nearing the end, and you can see what's going on here. It's just crazy. 39. Let's see. 39. Did we go to 39? Oh, 36. The next. So you see Asia opens right here, and you can see we went down to 39. That liquidity just took that liquidity out, and we started moving forward. It's funny. Anyway, you see what happens at the 11 o'clock. So just no trading for me. So that was that. I hope this was good. I hope you got what you wanted to get out of this. If you have any questions, let me know. I can do more days like this and just explain what I see, charts side by side. I can actually show you the trades that I take, but I'm very conservative on the part of trading. Basically, what I do, and I have a rule. If my first trade is successful for the day, I just stop. I mean, because with one trade, I basically take everything that I want out of the market, There's no need to overtrade. Just, just take it out. I mean, take the money out and have a very good day, right? So this is what I do. If my first trade is bad, then I'll trade for the second trade, and so forth and so forth. And I have, if I'm out three trades, three trades are bad, I end the day. There's no need, trying to get back in the market. Usually, I'm good with two trades if I don't require three trades in order to break even or make profit for the day. But the best days are when you just have one trade, is successful, you've taken what you wanted to take out of the market for that day, and you're just out. So I hope this is good for you, and I hope you take something out of it. That's the reason why I'm doing it anyways. So I hope you like this. Subscribe to the channel, leave a comment, like, hit that notification icon so you don't miss any of the videos that I upload, and I'll see you in the next video. Bye bye.